When we talk about investing in government securities, few instruments are as foundational and as widely respected as U.S. Treasuries. To understand them properly, imagine you are not just an investor, but a lender to the government of the United States. In simple terms, when you buy a Treasury bill, note, or bond, you are lending money to the government. And in return, the government promises to pay you back with interest. Because this promise is backed by the full faith and credit of the U.S. government, Treasuries are considered among the safest investments in the world, often used as a benchmark for risk-free returns in global finance.
Now, one of the most direct and intellectually elegant ways to participate in this system is through Treasurydirect. Think of Treasurydirect as a digital marketplace operated by the U.S. Treasury itself, where individuals can bypass intermediaries like banks or brokers and invest directly. For example, suppose a student in New York decides to invest $1,000 in a one-year Treasury bill. Through Treasurydirect, they can log in, select the maturity, place a non-competitive bid, which simply means they accept whatever yield is determined in the auction, and within days, the security is issued into their account. At maturity, they receive their principal plus interest automatically, no middleman required. The mechanism behind this process is the Treasury auction system, a fascinating example of large-scale financial coordination. The U.S. Treasury regularly conducts auctions to raise funds. There are two types of bidders, competitive and non-competitive. Large institutions, such as banks and hedge funds, submit competitive bids, specifying the yield they demand. In contrast, most individual investors submit non-competitive bids, ensuring they receive the security at the final yield determined by the market. For instance, if the auction yield settles at 4%, every non-competitive bidder receives that rate. This system ensures fairness while allowing price discovery driven by institutional expertise.
Let's deepen this with a practical illustration. Imagine a European student in Germany wants stable, low-risk returns during uncertain economic times. Instead of investing in volatile equities, they could allocate part of their portfolio to U.S. Treasuries via a brokerage account. Alternatively, they might invest in a Treasury-focused ETF, which bundles multiple government securities into a single tradable asset. This flexibility, direct purchase, ETFs, or secondary market trading, makes Treasuries accessible across different investor profiles and geographies. However, one crucial nuance often overlooked by beginners is liquidity. While Treasuries are highly liquid in the broader financial system, those purchased through Treasurydirect cannot be sold directly from that platform before maturity. To exit early, the investor must transfer the securities to a broker and sell them in the secondary market. This distinction highlights an important principle in finance. Convenience and flexibility often come at the cost of intermediation. Direct ownership offers simplicity and cost efficiency, but brokerage accounts provide greater liquidity and trading options. From a portfolio construction perspective, Treasuries serve multiple roles. They act as a hedge during market downturns, a source of predictable income, and a stabilizer against volatility. For retirement planning, especially in Western economies where pension systems increasingly rely on individual contributions, Treasuries provide a reliable anchor. Consider a diversified portfolio. Equities drive growth, while Treasuries preserve capital and provide income. This balance is central to modern portfolio theory, which emphasizes risk-adjusted returns rather than absolute gains. In conclusion, understanding how to purchase and manage U.S. Treasury securities is not merely about learning a financial tool. It is about grasping a core pillar of the global financial system. Whether accessed through Treasurydirect, banks, or brokerages, these instruments offer safety, transparency, and flexibility that few other investments can match. For students and young investors in America and Europe, mastering treasuries is a step toward disciplined, long-term wealth creation. And if this explanation helped you understand finance more clearly, don't forget to like, subscribe, share, and drop your thoughts in the comments. Your engagement helps build a smarter financial community.